All right, welcome back. The market today is sending out some seriously mixed signals. I mean, it is all over the place. On one hand, you look at the major indexes and things look pretty good. But right under the surface, there's this massive tug of war going on between a potential government shutdown, a super mysterious crypto whale, and of course, the AI boom that just won't quit. So let's dive in and try to make some sense of all this chaos.
Okay, first up, let's talk about the stock market itself. Because the big headline numbers, they're telling one story. But what's actually happening to most companies is, well, it's a completely different story.
Now this right here really shows you the disconnect. While the S&P 500 index as a whole has been creeping up, the reality for the companies inside it is kind of shocking. You can see it right there. Over 300 of them are actually down. They're in the red. Only about 167 are making any gains. It's a real tale of two markets.
So, here's the kicker. This isn't some broad, healthy market rally. It's really more of an illusion, and it's being created by just a handful of giant tech stocks. You've heard of the Magnificent Seven? We're talking Nvidia, Amazon, Google. These guys are so massive that their gains are literally propping up the entire index, hiding the fact that most other stocks are actually struggling right now.
Okay, now let's switch gears and head over to the crypto world. There's a single legendary investor who's making huge waves. And frankly, they're leaving everyone scratching their heads, trying to figure out what they're going to do next.
So, this trader, known as a whale because of the sheer size of their money, has an absolutely flawless track record. I mean, check this out. They turned an $850 million Bitcoin investment into $10 billion. They timed a $5 billion swap from Bitcoin to Ethereum perfectly. And they've made a string of huge, profitable bets against the market, calling crashes with incredible accuracy. We're talking 4 major moves without a single mistake. It's insane.
With a track record like that, you can see why the entire market is watching this person's every move. Every little thing they do is seen as a huge signal for where things are headed. So, the big question is, what are they up to right now?
First, just take a second to appreciate the sheer scale we're dealing with. This isn't just some small-time player. We're talking about a $10 billion portfolio. Any move they make can literally shift market sentiment.
And this is where the puzzle really gets interesting. They just made a new buy, about $55 million split between Bitcoin and Ethereum. Now, at first glance, that looks bullish, right? But that $55 million, it is a tiny, almost insignificant fraction of their $10 billion war chest. It's like a drop in the ocean.
So this is the $10 billion question, isn't it? Is this a real bet that the market's about to rip higher, or is this just a small, very public move, a head fake, designed to fool everyone else into thinking they're bullish, while their real money, the big money, is secretly being placed on a market crash? It is a masterclass in market psychology.
Now let's zoom out from these individual players and look at the massive political storm cloud that's hanging over the whole economy. I'm talking about the threat of a U.S. government shutdown, which is just adding a whole other layer of crazy uncertainty to the mix.
Publicly, of course, you have some leaders trying to sound optimistic. The Senate Majority Leader came out and said his intuition tells him they're getting closer to a deal to get the government back up and running.
But, despite all that happy talk, the reality is the clock is ticking. This shutdown is actually on track to break the record to become the longest government shutdown in the entire history of the United States. It's really serious.
And look, this isn't just political theater. This has very real consequences for everybody. We're seeing delays in crucial economic data that the markets need to function. The US dollar is getting stronger, which puts pressure on things like gold. And the USDA has already said it's going to have to start cutting back on food assistance benefits for families.
So, we've got a divided stock market, a whale who might be playing games, and a government on the verge of a record shutdown. How on earth is anyone supposed to make sense of this? Well, let's turn to some analysis from Goldman Sachs to see if we can find a playbook.
First things first, you've got to understand the kind of environment we're in. Fed Governor Lisa Cook put it perfectly recently. She warned that it feels like there are risks to financial stability hiding under every rock. So, caution is definitely the word of the day. So a Goldman analyst, Chris Hussey, he points out this paradox. Why did stocks rally when we got bad economic news? And he gives 3 main reasons. First, it's that old saying, bad news is good news, because it might mean the Fed will stop hiking interest rates. Second, the whole AI story is just so powerful that it's basically drowning out all the other negative data. And third, well, maybe all the bad news is just already priced into the market. But really, when you boil it all down, what's happening on the trading floors tells the true story. The team at Goldman said the unofficial mantra was incredibly simple. It was basically sell everything else to buy the Magnificent Seven. That's it. That was the whole game.
So what's the expert advice in this kind of a crazy environment? Well, Goldman's head of hedge fund coverage basically says this is not the time to fight the big trend. Instead, the name of the game is to stay nimble, keep your finger on the pulse of the market, and use tools like short-term options to manage your risk carefully.
And there you have it. That's our breakdown of all these conflicting forces, pulling the market every which way. You've got a super narrow rally, a political standoff in Washington, and a legendary trader playing some serious mind games. That's your Daily Edge. See you next time.